Spoke with Nilesh Shah, who's the MD and CEO of Envision, and this is what he had to say on a whole host of things, including market and the IT sector in particular.
I think the most insightful takeaway was essentially that it's yet the start of the bull market in India. And the potential of NPS, the potential of pension money coming in, it just shows how long the runway of liquidity is for. We're all aware about the kind of runway that growth has in India. But I think that was a very, very interesting kind of an insight that he shared, that what happened in the United States between 1980 to 2000 for 20 long years, there's a very strong possibility that we could see a repeat of that in India.
So the power of liquidity could keep the markets higher. So while it's great, you can keep your SIPs going, but to put fresh money to work at these levels is concerning for a lot of people. How would you respond to that?
No, I think the best way to really do that is to juxtapose in terms of what's the long-term potential. I think in the short term, we could probably look at how the markets have moved up, how they have been resilient, how valuations are not as reasonable or low as they were maybe a year or 2 years ago. But I think when you kind of fast forward to 3 years, 5 years kind of perspective, if you have that kind of a perspective, I still believe that there are pockets of opportunities, there are pockets of undervaluation or pockets of reasonable valuation, and that essentially should be the big focus area.
So what's the emerging opportunity for you?
I clearly believe that the big opportunity is still going to be around tech-oriented businesses, not the conventional IT services, but businesses which can use technology to reach out to millions of consumers, billions of investors.
Give us an example.
Savers. I can't mention specific name, but I think
new age e-commerce companies.
Absolutely, e-commerce companies, fintech companies, companies which are providing technology in creation of the digital public infrastructure. I think that's a reasonably big universe. I mean, if you really look at it, every 5 or 10 years, we've had essentially a rotational change in leadership. Right. We had earlier the private banks or some of the leading NBFCs. Then it came over to PSU banks. I clearly believe the next 5-10 years belong to fintechs. Similarly, on the consumption side, there was a time when staples were really the preferred bets. I think going forward, it's going to be some of these online consumer internet plays.
And here, you're not concerned about the valuations or the run-up we've seen?
I think the way growth, I think these are businesses which essentially are going to witness hyper growth. I clearly believe these are going to be the hyperscalers of India. And I think when you have businesses which are going to compound and grow at maybe 25-30% year on year for say 10 long years, I think the power of that can be very magical.
What about the budget? What's your expectation?
Well, huge expectations. This is essentially going to be the first budget of the government in its third term. It's going to be important to see whether there's going to be continuity or there's going to be continuity plus a lot of new changes. I just hope that the focus on infrastructure even amplifies further. Clearly, I think social spending is going to take center stage, which will essentially prop up the rural economy and ensure that we have more strong all-round growth in the Indian economy. So I think infrastructure, social spending, I think these are the two big areas that the budget is going to focus on.
Have you booked profits in any themes? And if yes, which?
Not really, but yes, surely kind of cutting down exposure on the capital goods side.
Why? Is it just the valuations or growth is slowing down?
No, I think the valuations now, versus like, I think we bought many of them 2 years ago, 3 years ago, when valuations were a lot lower. In the meantime, these businesses have grown at 20-30%, but the market caps have grown by whatever, 200, 300, 400, 500%. I think now no longer are these businesses at 20-25p, they're at 70-80p multiples.
Going up to 100.
And going up to 100 in some cases. So I think we're not exiting, but yes, we are surely pruning down exposure.
Okay. So which would be the big overweights for you now?
I clearly think we're going towards fintechs being a very, very big overweight right now. I think in addition to that, some of the peripheral financials, not just fintech, but outside of the banks, or some of the insurance companies, some of the AMCs, I think distributors of financial products, I think that space is really becoming now a significant overweight for us.
And IT, what have you made of what we've seen from TCS, HCL Tech? The tide is turned?
I don't think so. I clearly believe that the best is behind them. If you just really look at it, I think the market is cheering that instead of 2% growth, they've ended up with 2.5% growth. That's about it. Yes, surely the results have been a bit above expectations, but I don't think it's good enough. These are probably just going to be tactical bets. I don't think you want to make long-term strategic bets here.
Okay, we spoke about IT. That was the last question, but